I personally, in this country, we have actually had gold confiscated 3 times. The last time was 33. Right. So we have a history of gold confiscation. Additionally, like in India in 2016, when they demonetized their currency, they did go, I think it was selective, but they did go house to house gathering gold. And India, which is really known, especially the population, holds their wealth personally, right? Yeah. So they're known for that. And India's been trying to get them to deposit their gold forever. It's some great work that the central bank in India did on how to do that. But they did go house to house and do a certain level of confiscation. So that was 2016. That's not that long ago. And it's happened in Vietnam. I mean, it's happened in recent history in a number of places. So my personal feeling is that it is most likely to happen again here. I look at what you can hold in an IRA because that's classified as monetary gold. And that's where most of the gold is actually held by the general public, is inside of IRAs. So if they were to do an overt confiscation, because inflation is a covert confiscation, price manipulation is a covert confiscation, right? So if they were to do an overt confiscation and say, turn in your gold, how easy would it be to do a big, huge sweep of the IRAs?
Right. Yeah. Automatic. Yeah.
Right. I mean, I want to be personally in the classification that is least likely to be confiscated. And that would be with a person that just spent $8 million on 1 ounce of gold, because frankly, they're either writing the laws like Treasury Secretary Wooden was when he put that law in place that my Uncle Al could hold those pre-33s because he wanted to keep accumulating it, or they would likely have the ability to influence those that write those laws. But you see, the eminent domain laws say that the government can take anything, but they have to pay you fair market value, which is being manipulated.
Right. Yeah.
Right. But the collectible coins make up less than 2% of the total gold market. So they would have to look at every single coin. It would be too complicated. It wouldn't be worth it. Plus, again, I want to be on the side of the influencers. And you don't have to spend $8 million to do that, by the way.
Right.
The premiums have been so low. They've been getting bigger, but they're still so low. And they're also severely undervalued. So I do just a basic, easy calculation. Okay, what's the fundamental value? What's the true value of an ounce of gold for its most important function? And in my opinion, the most important function is to hold your wealth, your purchasing power even. Does many other things, but that's the most important function. So if I know for an absolute fact that the true value of an ounce of gold is $50,000, then quite honestly, I haven't really spent $50,000 on a coin, but I'm just saying, I do know that the minimum fundamental value of an ounce of gold is 50 grand. So if I spend anything less than that, and it's on even a high collectible, my bet is hedged. One thing they knew when they set up this whole system is that, people marry the legal money of the state. And so what they say in their documents, so I'm not making this up, this is what they say in their documents, anybody can read them, is that they need to keep the new currency as close to the norm that people are used to as possible. And that's what happened in 1971, right? And if you look at the bills, they look really identical.
Sure.
It's very subtle. So people did not know of the change. Now, I think it's coincidental that in 1996, the NSA did a white paper, government agency, did a white paper on how to create a mint. outlining how to develop the cryptocurrencies and the market. I don't know. Then in 90, I think it was 7 or 8, there was a peer review paper on smart contracts. Bitcoin came out in January of 2000, and I've been watching it since it was $7. One of my clients said, "Hey, look at this." So Bitcoin came out in January of 2009. What else? Where were we in this trend cycle? The system died in 2008. Hello, it died. Right? And then in March of 2009, the Federal Reserve began this next major experiment in quantitative easing, which is just massive money printing to massively devalue the currency. Is that a coincidence? I don't really believe in coincidences, if you want to know the truth. So yeah, that is my opinion of it. And I will say the people that buy the cryptocurrencies and the people that buy the gold have a very similar mindset. They're really unhappy with what they're seeing, and they want a decentralized private place to hold wealth. I get that, and I really do get that. But I don't think you're very private with Bitcoin, because what do? When you open an account, don't you have to give them your name, address, social security number? And they were supposed to not be able to, on the blockchain, that was supposed to be a permanent transaction. And yet recently, haven't we seen some money being clawed back by the government in Bitcoin from people that had taken it?
Sure.
So that means that's not really true, right? It's not immutable. They can claw it back. So it's not private. It is decentralized. When we had gold and silver and it was in physical form, it was very heavy and inconvenient to carry that around. So you'd put it in a bank and they'd give you a gold certificate or a silver certificate, which you could go into any bank if you didn't like what the government was doing and you could convert it. So you had a decentralized money that was actually really private, and it controlled the government, because if you converted your gold certificates and took the gold out of the bank, well, then it created restrictions around how much spending the government could do. They didn't like that. So then they transitioned us into convenient paper money,